Hello and welcome to a new video update. This one's going to be on the pinpoint algorithm. This is my latest algorithm that's releasing to the public today. I'm really excited about this one because it has a 94% win rate on the pound US dollar and the euro US dollar over a 17-year period of time. So this is a real thing. It definitely does have a 94% win rate over 17 years. So far in my testing over the last 2 months, so 8 weeks, I have a 100% win rate with this strategy. I'm going to show you those stats here in a second. But as you may know, brokers have been cracking down on leverage. So where we used to get 500 or even 1,000 to 1 leverage, regulations causing these brokers to minimize the available leverage to retail traders like you and me, and it's making it really difficult for us to make a profit with small account balances. So one thing that's really special about this pinpoint algorithm is that it's able to make the same profit of 2 to 3% every single month on these pairs, the euro US dollar and the pound US dollar, on a 30 to 1 leverage account and a 1,000 to 1 leverage account. So the 2 to 3% profit estimation is the same across the board, from low leverage to high leverage. And this is something that I was working so hard over the last many years to achieve, knowing that this is where brokers were going when it came to leverage. And I finally achieved it with this algorithm, and so I'm ready to show you guys. Alright, so here we are on my FX book. This is the tracked account that's been going for the last 2 months. This is running the latest pinpoint version 1.8, which again is available to the public, so you can check it out on my website. And what's so cool about this account is that it has 48 trades out of 48 trades that have been won. So that's a 100% win rate over the last 2 months. So as I showed you guys before, with the strategy tester, it shows a 94% win rate over a 17-year period of time. And you can see that right here. And this is also public, so you can view these strategy testers statements on my FX book as well. And these have been done with 99.9% modeling quality. So you can trust that this is as closely simulated to live performance as we can possibly get with this strategy. All right, so this has again a 94% win rate over 17-year period of time, and you can see that there are very few losses out of all the winning trades. So going back to the actual account balance for the strategy, you can see that we're sitting only on 6.9%. And the reason why is because we're running this strategy at lower risk, and we want it to be capable of the same profit on a 30 to 1 leverage account all the way up to 1,000 to 1 to make sure that it's versatile and at pretty much any broker that you're using it at. And I mentioned before that brokers are cracking down on leverage, and it's going to continue to shrink over time, making it more difficult for us as traders to really profit in this market, to really have takeaway profit when leverage keeps getting minimized. And so this strategy allows traders to make 2 to 3% every single month on a $1,000 balance with only 30 to 1 leverage. And you can see that, it has a really high win percentage, and right now it's showing 100% over the last 2 months, but I expect this to go down over time into around the 94% win rate over the longer period of time. So I wanted to show you one more tracked account on my FX book, and this one's pretty special because it's running my Ranger algorithm and the pinpoint algorithm on one account. So if you're not familiar with the Ranger algorithm, here's 12 months results of the Ranger algorithm. So it's shown a 72% profit on this account with just 10% drawdown, and you can see that it's profited every single month over the last 12 months. So that's the Ranger algorithm. So I'm running it with my new pinpoint algorithm on the same account, and you can see that we're already sitting at 14% profit since October 23rd of 2020. So this account has a 7.36% monthly average, which is really quite high for Forex trading when it comes to controlled risk money management. I'm also blocking out the information when it comes to balance size and things like that to protect myself. I know that a lot of you guys want to see how much I'm actually trading, and that's something that I'm always going to keep private to protect myself, because when it comes to being a public trader, I'm already seeing it happen where people are impersonating me. I've seen it on Instagram. I've seen it on YouTube. I've even seen it in email format as well, where people contact me, hey, I was contacted by somebody trying to get me to send you Bitcoin. I'm like, wait, I don't ask people to send me Bitcoin. I'm only do my business through my email that is on my website, and also through my Discord channel, which is Responsible Forex Trading, and that is in the link in the description. Anybody's free to join that Discord group, and that's where I do most of my direct contact. So if anybody's asking you to send Bitcoin to me, I'm never going to ask you to do that. That's something that is a scam, and run far away from that, okay? And another reason why I keep my information, like the balance size, confidential, to protect myself from, well, predators like that. Okay, now, so this account has an 80% win rate running both strategies. You can see all the closed trades here. So I do allow you to see the closed trades and the profit that took place when it comes to pip amount. All right, so we're still looking at some really good gains with these two strategies. Okay, so now I'm going to go into some detail about how the pinpoint algorithm trades and how it's able to get that 94% win rate. So this is the backtest running on the pound US dollar from 2003 all the way to 2020. So that is 17 years, and that's the largest sample size that I could actually pull from Dukascopy. So this is 99.9% modeling quality. That's the best modeling quality that you can get. And then when you purchase this data, because you can only get it for paying for it, when you purchase this data, you can also simulate live execution, and you can also do a variable spread. So this is basically the best simulated performance that you can possibly get when strategy testing in general. So unless you're using bank software or institutional software where they have even more advanced options when it comes to simulated performance. But this is some of the best that we have as retail traders. All right, so when it comes to backtesting, we can only rely on simulated performance so much because the markets are changing on a daily basis. And so it makes us one step behind what the market is doing, because our systems, our range trading strategies, our trend trading strategies, our scalping strategies are all based on previous patterns that the market has done. And so we're expecting those previous patterns to potentially happen again, and that's when we hope to profit from this market. But the thing is that because the markets are constantly changing and the patterns are changing, it makes it really difficult for us to stay ahead of the changing market. And so what I've done here is I've decided to pull as much data with this algorithm or with this strategy in the hopes that it has a better ability at adapting at the future, because it's able to combine more variables over many years of time. All right, so that's why I've built this strategy, and that's why I think it's strong. And so you can see the marks here. So it's only pulling a 1.23% monthly average, which you might think is pretty low. But again, this is on a 30-to-1 leverage account, and that's only on one pair. So this is the Euro US dollar, and the Euro US dollar is also at about 1% as well. So we're looking at about a 2% gain on a 30-to-1 leverage account. Now, some of you might be thinking, well, that's just too low for my liking. But realize when brokers can continue to crack down on leverage, it's going to make it way more difficult for you to profit using small accounts. You can increase the risk, but that's something that I'm always against when it comes to trading on the long term. I'm going to always recommend staying within a conservative trading method for long term, so everybody that's using my algorithms, including myself, can profit more incrementally in a steady pace and looking for a potential for retirement 5, even 10 years down the road. So that's the idea, and that is the mission here. All right, so now I'm going to talk about losses and how losses affect the strategy and how they're able to be controlled over a 17-year period of time. So this is still on the pound US dollar, and this is a loss that's taken place right here. So this is a 200 pip loss that happened. Okay, so this was back in 2004, 3-2, and 3 days later, a trade was taken for 18 pips, and the loss of 220 pips was made back. Sorry, $220 loss was made back with $290 profit. So the loss was directly made back on the next trade. And so that is how the strategy works. And we've never lost more than one trade in a row on the pound US dollar over 17 years of time. So you can see right here, most everything is green. So here's another trade. 200 pip loss. Next trade was 15 pips. We made $275 on that one, and the previous loss was 243. So now I'm going to show you the Euro US dollar because it's not always perfect. Over the last 17 years, we took two minus 24% hits. Okay, so that was one in 2003 and one in 2013. And what that looks like is two trades in a row. So we had two losses. You can see right here. So the Euro US dollar had two losses in a row in its history, and that only happened twice though. So the first one was 150 pips, the second one was 150 pips, and we did increase the risk. So this is our starting lot size at 0.03. We increased it by 15 times. Then after we accepted this loss, the second loss, we went back to the original lot size. You may be wondering, well, why not keep the risk at, or increase the risk one more time and make back the loss of the last two trades? That would require a lot of margin. That would require roughly around 400 to 1 leverage in order for you to have the margin to withstand an increased lot size again. So to keep this strategy controlled and to keep your losses controlled, because we're only accepting basically two 24% losses over the span, well, it's actually in this case, it's only 21.3, well, actually about 22%. That was what the loss that we accepted on the Euro US dollar. And accepting that just twice in its 17-year history is much better than taking a massive third trade at whatever the lot size would be, which I think it would be somewhere around 4 lots or something like that. That's pretty insane to make up the recovery trade. And it just doesn't make a whole lot of sense when trading in this day and age with lower leverage. So I just finished running a back test on the pound to US dollar over 17 years, and this is a $10,000 balance going into $143,000 in a matter of 17 years. So you can see that the backtest is being run on the M15 time frame. So we're using the M15 for our trade entries, but the daily time frame is being used as our trend. So we're taking the trend off of the daily time frame and we're entering on the M15. So how that works is we're taking the trend off of the higher time frame and we're looking for dips in price to enter the market. So we want the dip to happen within the trend, as you can see right here, and then price bounced back up for a realized profit. And so here we are again. Took another trade with the trend. Now this one went a little bit against us before jumping back up and hitting our target. Some trades will do that. And then this one was a very quick and easy profit target. And I'm going to get rid of this so you guys can see better. So we had the dip that took place, and then target was hit, entry, and we're looking for that continuation of the trend on the upside. Okay, so we had another trade entry here, the dip, bought, recover, or continuation. Okay, and then we had another one. This one was a quick, fast profit. Okay, and then this one was pretty cool because it took a trade right here, and then another dip, and then with a profit, and then another dip with a profit, and look what happened. The trend continued after that. So again, the strategy is using two time frames for its methodology. So one is the bigger trend, and then the M15 is for better entries within that trend. So the last thing I wanted to cover in this video today is my brand new website, responsibleforextrading.com. This is launching in tandem with the pinpoint algorithm. So these are both launching on basically the same day. And if you go to the website, you can check out, and you can click on the link Pinpoint EA Logic and Backtest to find out more information about the pinpoint algorithm and watch a couple of videos on it as well. But what I wanted to talk to you right now is on the front page, you can see the Ranger EA and Pinpoint EA. And if you click on one of the buy buttons and it says purchase securely through the MQL5 partner website, it will take you to MQL5. Don't be jarred by this because this is a place for us to protect ourselves and to protect you in the process of purchasing our trading tools, our algorithms. So we want to make sure that everything is safe in that respect. All right, so don't be confused if when it takes you to MQL5 to purchase our algorithms. All right, so if you scroll down, and why choose us? You'll see the Discord channel. Now this Discord channel has, at the time of making this video, has over 700 people in it right now. These are traders that are just traders in general, but a good portion of them are traders that are using the Ranger and Pinpoint algorithms. This channel was built for those algorithms so traders can help each other when it comes to technical support. I'm also very active on this channel as well, helping traders and also showing performance and updates. And you can speak to other traders that have been using these algorithms for 8 to 10 months. And so if you want to know other people's experience besides myself, you're free to talk to and message these individuals through this free Discord group. All right, so that's pretty much what I wanted to cover on this video. I hope that you can check out my brand new website and look at the Pinpoint and Ranger algorithms and find out if they're a good fit for your trading style, because I know that every single trader is different. And what I'm trying to do in my channel here and with my algorithms is hopefully cause you to be more responsible in your Forex trading, because so much bad advice is out there, causing so many traders to lose money and to fall on their faces when it comes to blowing their accounts. And I don't want that to take place. And that's why I built these two algorithms, so they can help guide you in the right direction when it comes to responsibly trading the Forex market. Thanks so much for watching. See you on the next one.